Nifty 13th February 2026, expiry 17th February 2026, close 25,471.10. Opening, markets move on positioning. Let's decode today's structure. This is the structured end of day review for Nifty. No bias, no projection, only price behavior, turnover and option positioning. Price behavior, open 25,571, high 25,630, low 25,444. Close 25,471. The session opened near the upper side of the day's eventual range. There was an early attempt to hold higher levels, but acceptance failed. Price gradually displaced lower and closed near the lower third of the session range. Important context. The previous dominant interaction band was 25,800 to 26,000. Today, price remains structurally below that entire zone. This confirms migration of active trade lower. No recovery into prior supply, no late session squeeze. Controlled pressure throughout the day. Cash market turnover, total equity turnover, rupees 1.23 lakh crore. This was higher than the previous session. Participation expanded. This was not a thin liquidity move. Institutional engagement was present. The move occurred with capital commitment. Derivatives participation, index options, 10.69 crore contracts traded. This was elevated participation. Options were actively repositioned. This was not passive expiry drift. Index futures, open interest increased to 3,54,159. Futures OI expanded into a declining session. Price moved lower while participation increased. That confirms active positioning, not short covering. This was structured expansion. Call side structure, overhead supply shifted lower during the session. Key observations, at the 25,500 call, significant open interest build. At the 25,600 call, heavy concentration. At the 26,000 call, still a major cap layer. Supply is no longer concentrated only above 25,800. It has migrated closer to current price. This creates tighter overhead pressure. The supply wall is now nearer to spot. Put side structure, support repositioned lower. The earlier dominant 25,800 put base has weakened significantly. That support layer was dismantled. Now, at the 25,600 put, moderate base. At the 25,500 put, active participation. Support has shifted downward in alignment with price. This confirms structural rebalancing, not defensive hold. The market is not defending higher zones anymore. Volatility condition. At the money implied volatility remained around 9 to 10%. There was no volatility spike, no panic premium expansion. Options repriced in a controlled manner. This was orderly repositioning, not disorder. When implied volatility stays stable during displacement, it indicates mechanical flow rather than emotional reaction. Structural interpretation. Key structural elements. Price displaced lower. Futures OI expanded. Cash turnover increased. Call supply migrated downward. Put base shifted lower. Implied volatility remained stable. This combination defines controlled downward expansion with active positioning. Not compression, not panic, not exhaustion. Structured repositioning. Structural zones carry forward. New interaction band 25,450 to 25,600. Overhead supply 25,600 call, 26,000 call. Below market monitoring 25,400, 25,300. The previous 25,800 to 26,000 structure is no longer the active battlefield. The market has rotated lower. Monitoring protocol for next session. Priority order. First, turnover. Is participation expanding or contracting? Second, futures open interest. Is OI increasing with movement? Third, option layering. Is call supply thickening at 25,600? Is put support stabilizing at 25,500? Fourth, volatility. Any sudden repricing? No assumptions, only observation. Closing statement. 13th February 2026 session confirms structural migration lower with participation. The market has reset its active zone. Tomorrow the question is not direction. The question is participation quality and structural response inside the new band. This concludes the professional structural update for 13th February 2026.